YouTube fam, Fat Man Zoom here. I wanted to talk to you about my newest high conviction stock, which is Dollar General. They just reported earnings. Subsequently, the stock dropped. It's down about 6% as we speak on the day. However, I went through the earnings and I'm going to break down the fundamentals, the technicals, and why I actually feel really good about this stock. It's shaping up to be a great asymmetrical trade opportunity, and why I think this is a great stock for reopening and also for a little bit of a longer swing trade. So first things first, say what's up to Brad. We have, here's what happened with their earnings. So they did miss their earnings per share. The expectations were $2.72 a share. They came in at $2.62, so it was a slight miss. They did beat on revenue. 8.3 was expected revenue. They came in at $8.4 billion. Comps were up over 12%, and their guidance beat on the year. Now, their forward-looking guidance for this year was underwhelming. It's expected to be lower than this year. Lower than last year. And I think what really hurt them was the first half of the year, they gave really conservative expectations. They're not really sure what to expect, but basically what they said was it's going to be hard for them to outperform essentially the numbers that they had produced during lockdown. So if you remember, right before lockdown, pretty much all the grocery stores and the chains that sold consumer goods just had an influx of customers. And so Dollar General experienced the same thing. And I think they're expecting it to be tough to outperform, at least for this first quarter, if not the next two quarters. They do expect strength the second half of the year. But to be honest, I think they're going to have a great year overall, and I wouldn't be surprised if they outperformed. However, as far as guidance is concerned, they said they expected it to be flat, if not down up to 2%. So remains to be seen. Earnings per share for the year, the range is just below $10. So we'll look at that. Now, here's the good things that came from the earnings, and largely what I think will be hopefully catalysts. They raised their dividend over 16%, which means that their cash is still good. And also, I mean, this puts their dividend over a 1% yield, which isn't huge, but it's respectable. And they talked about the cash on hand that they had, and they plan on using it. Another way they used it was they're going to spend $1.8 billion in share buybacks. We've seen a lot of companies do this, especially value stocks, where they're looking to spend some of their cash. I don't think there's going to be a huge move, but it's nice to have, and I think it shows health and the cash flow. So all that good stuff. A metric that came from the call that I didn't realize was that 75% of the U.S. population lives within 5 miles of a Dollar General, which is wild to me when you think about that. Over 300 million people, 75% of them live within 5 miles of Dollar General, which is really close, obviously. So that's really cool. On one hand, you may be concerned that would mean, like, how much can you expand? However, they are looking to expand their footprint. Looks like they're remodeling their existing stores. They're playing around with the 10 to 15% square footage in their larger stores, creating more value. They look like they're moving away from low cost. I don't want to say low cost, but discounts, and creating more value. All that stuff sounds good from a fundamental perspective. They also have opportunities, I think, with sort of like small store. I think they're called Pop Fresh, where sort of like quick grab things, right? So to me, I'm not trying to figure out if it's going to work or not work, but I like that they're trying to diversify and reach different types of consumers. So all that stuff bodes really well. From a technical perspective, I'm going to go ahead and see if I can share my screen here. So when we look at the chart, here on the left-hand side, you can see April of last year. We're only 5% off of this April support, which is 169. So as far as I'm looking at it, we have about a 5% downside when we talk about risk in an asymmetrical trade, currently sitting at 179. Upside though, if it hits 220, that's over a 20% upside. So you're talking about a 4-to-1 asymmetrical trade opportunity. I think this thing should be above $200. Realistically, I think this thing could get to $220. With all that being said, I do feel really good as far as the long-term prospects of Dollar General is concerned. I think they need to be a little bit conservative. We're seeing a lot of these companies with the uncertainty about how the rollout's going to look and how consumer demand's going to come back. They're being conservative of their guidance. I think that's smart for them to do, but I don't think that's actually what's going to happen. We're returning to normal quicker than I believe people expect. We just hit 100 million vaccinations, so I think that we're going to see an increase in traffic. And based on everything else they're doing, I think they're going to see great revenue growth. I'm very bullish on this. I have high conviction on this. There's a great reopening play. And to me, this is a great dip buy opportunity. So check out Dollar General. Let me know what you think in the comments. Another high conviction stock for Fat Man Zoom. All right, guys, don't forget to like and subscribe. See you in the next video.